The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome. It's a beautiful Thursday, September 20th. It is National Clean Hands Week. Cleanliness next to godliness, and we always enjoy having a wonderful day when we're out there having just a great day. National Clean Hands Week. Remember, when you're preparing food, wash your hands before meals and snacks, after using the restroom, after touching animals, when your hands are dirty, and when you are ill. Now, I guess maybe we've gotten just a little bit too much with the Perel. I'm kind of thinking that maybe we need at least a certain amount of bacteria floating around, that if we don't, when real bacteria gets us, we won't have any natural immunity. We've been so good about keeping, how can I say that, germs at bay, that I think we're probably getting kind of wimpy. Our little immune systems can't do anything. They've never been challenged. It's like Poindexter with the classroom bully. He's just going to fold like a $2 suit. So I don't know. It is National Clean Hands Week. I like it when other people doing it. I like it especially if I'm having leafy vegetables at a Mexican restaurant, although I suspect many do not wash their hands by the amount of Mexican food-borne illnesses. But anyway, we do have kind of a week to think about it, and we'll see how everything else goes. They handle money and fix your food. Ooh, I forgot about that. Yes. Samsung Galaxy 4, we're hearing it will now be in March of next year. Samsung is now starting to kick out 128 gigabyte flash memory. I guess I didn't spell it right there, but flash memory cards, and it is one of those things where they are just now kicking them out. Look to actually see these. They've got a category now, and they're calling them the high echelon of smartphones, and that is super phones, kind of like supercars. But the it is the Galaxy 4 bullet crack. Oh, no. If someone's watching at home, that is a dandelion on that phone. It's not. It looks like a bullet crack. I thought the same thing when I first saw it, but I think maybe they did it. But it's got like a moon in the background. Maybe that's clouds or something. But of course, the Samsung Galaxy 3, kind of the high end, and probably even with the iPhone 5 now, probably still the most sophisticated phone. A lot of people think sophistication means thinner and lighter. I just can't tell the difference between 4 ounces and 3.5 ounces. And, you know, my eyesight, at least for reading, is poor. I like to have the bigger monitor. So it's always one of those things where we can actually see these things coming. But apparently their next round, the Galaxy 4, is coming out in March of next year. Of course, they tend to rev their products a lot faster. But maybe not the same consistency in the Android market than Apple's iPhones have. There was IMAX CEOs and corporate executives have been making the rounds here a little bit over the TV the last few days. Started to think about what is their future. We've talked about on this show, everybody has seen 3D revolution come and mostly go for the theaters. One of the reasons that we saw Titanic in 3D was that the maker of that movie decided to spend about 15 or 16 million of his own movie money to design a process to do it post. Therefore, it didn't have to automatically be shot in 3D to begin with, saving a lot of money. Of course, they literally had a camera with 2 reels of film in it for shooting 3Ds to begin with, which at least doubled, if not even more, extended the price of making a 3D film. But it's when you kind of think of IMAX, now we've got 3D televisions at home. Fully about 15% of the people cannot, it's just the way that their brains are built, actually comprehend 3D. A lot of people just find it irritating or gives them headaches. One of the interesting things that one of the CEOs said, though, was it was like watching a movie with sunglasses on. And that's true. They're tinted, brings the light down, and especially in IMAX already, where they're using a super bright xenon bulb to actually project the movie. That those bulbs, from the day that they are put in, continually fall off on the amount of light that they produce. If you're there at the end of the run of the light bulb, it may not be bright enough for you. They're actually using a patent from Kodak about using a laser instead of using a bulb anymore to actually drive movies of the future. But IMAX still pushing along. I think that I guess you'll always have that option. The idea is to get people off their couches, rent a movie for $1.50 at Coinstar in Blu-ray. Is it really worth spending $8 a pop to drag a bunch of kids out there? They've always had this idea that you're going to have to stay ahead in the technology to bring people in. When television came out, there was the battle cry. That would be the end of the movie system. Who's going to go and pay if they can watch it on their TV? But of course, the quality difference for at least 50 years never even came close to movie theater, even a poor movie theater. But now we actually have that kind of quality. IMAX needs to keep ahead for the immersive technology that they have. They're in 43 countries. But right now they're saying the future of IMAX is better technology for actually displaying higher resolution images and at brighter levels for 3D. I still suspect that we've seen the 3D fad come and go once again. It happened in the 30s, it happened in the 50s, it happened in the late 70s, and we're going through it yet again, and it doesn't look like probably going to do much for movie theaters. I suspect we're going to go back in, maybe have some movies in 3D, but probably more of a niche market where it can really be used. Most of the time, it's just distracting. Losers today were the winners yesterday, which were the losers the day before. We've got a market that's really going rather sideways for the most part. And Green Mountain, again, is one of those companies that is on the losing side. We'll see real quick as I pull up my quote system here. Hang on just a second. And yeah, off 9% Bed Bath & Beyond. Green Mountain's off 8%, 9% on Bed Bath & Beyond. Sears Holdings off 6%. $3.77 or so. C-Strip, which was a winner the other day, down 4%. Avago Technologies off 4%. Fossil off 4%. Most of these were the ones that bounced early in this week on short covering, but we still have the same things. We were looking for Apple. My thought was Apple was going to try to expire somewhere at $700, and my theory right now, working theory, is that most of these stocks, at least the larger ones, are going to be trying to drive themselves into the nearest strike price for Friday's expiration at the end close of the day. We just don't see quite a lot of movement in this market to really move off 3 points as we speak on the S&P. 2.2 billion shares, so volume's better than it was in August, but still not what we would be looking for when we think that the market's actually going to change or do something this week. So again, a fairly quiet week. Micron's off 3%. It was up something equal to that the day before. We'll go through some of these later in the day. But on the positive side, Dollar Tree is the best on the NASDAQ 100. DLTR is up about 4.6%. Adobe System up about 3.5%. Netflix up about 2.4%. Mattel up 2.3%, and I think that was off the other day. Monster Beverage, which was off hard, is up 2% today. Seagate Technology up 2%. at least back in the $30 range. I suspect that both, we talked a lot about it, the margins are just not going to be what they were over the last year after the Malaysian floods that cut down on a lot of production. And of course, both of those companies were buying other hard drive manufacturers and cutting out other sources of low margin drives, kind of bringing their up. O'Reilly, of course, was off. It's up about 2% today. Ross Stores, another one, 1.8%. Sirius XM satellite still hanging in there, kind of like a loose tooth, just about ready to fall out. $2.53, up 1.6%. So we can continue to see these, like Starbucks up 1.5%. Just not a lot there. Starbucks looks to me like it wants to expire somewhere around $50. I imagine they're going to drive it back down there today after pumping it up here today, getting it high enough to let it sell off. But it really looks like a lot of these stocks are just moving around, setting up for expiration tomorrow, and we'll watch and see how they do. As we get back into commodities, crude's pretty much flat off about 12 cents. Will we look at some of the other things like platinum off 13 bucks, silver up 8 cents, gold off $1. It was off, I think, 7 or 8 bucks earlier this morning, but still not much movement. We've got natural gas off or up 3 cents. Not a whole lot happening in it either. So we'll continue to check out this market as we look. You can always give us a call at 877-927-6648, and we'll be glad to take your phone calls and talk about what you want to. This is an excellent time to actually be doing that right now because of, just kind of a quiet market out there. Trulia today, TRLA. I didn't get a quote on that yet. Of course, we talked about this on Monday. New IPO, TRLA. Of course, one of the few in the right sector. It popped up almost $8 higher, 46% higher than its IPO price today. But I don't know. It seems to me like between them and Zillow and the luggage manufacturer, a handful of IPOs that have done okay, but almost all of them have started coming back to earth. We continue to see companies like Facebook being pumped a little bit, and I suspect that's to get the price up before all the heavy selling that will be the insiders of smaller margins coming out. But we're up to 23 bucks on Facebook. I suspect that we're going to probably start seeing the selling start in a week for those insiders, the three big ones that are still out there. We got one more news article. Fusion looks like it's a little closer than it has been in the past. We'll talk a little bit about that, get into some more stocks. Give me a call at 877-927-6648, 877-927-6648.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Anyway, probably the most interesting, probably nothing we can make money off of in the near future, but still interesting. A paper from Sandia researchers, that's the nuclear research facility out in the West, got accepted a publication that states that a new technology for fusion could finally reach the break-even point. Their tests and have pretty much shown that they now have come up with a way of generating basically 1,000 times more energy than they have to put in to start a reaction. Everybody remembers Back to the Future and Mr. Fusion on the nice DeLorean car. The idea, of course, is fusion would not be radioactive. It would be the cleanest energy source. Other people have always said that nuclear fusion is the technology of the future and always will be. The problem is that every time you get a little closer, a lot of times people think it's a lot farther off. This paper actually would make the 50-year projection maybe down to 25 or 20 if they've actually been able to figure out how to reach the temperatures they need to get to fusion. This is kind of a two-step process where they heat helium or hydrogen. What was it? It would be hydrogen. before they actually put it in. So it's kind of like a two-step process. We're going to heat it a bit and then actually hit it again with maybe a high-powered laser to bring the temperature up to that of the sun, where you can get a self-sustaining reaction. If we did, that would be I guess the Rosetta Stone, the holy grail of all energy, being able to put out as much as you'd ever want to. Right now, I think the cheapest energy you can produce is coal. It's around 5 cents for a kilowatt hour, and I think when we look at nuclear, it's, if you actually put in the recovery of the fuel, it's like 7 cents. Without it, it's like 3 cents. These were a couple of years ago, but we start looking at everything going up way above that. I think natural gas, last time I looked, was 8 cents or 9 cents. And then it just gets more expensive, incrementally expensive. This would actually change a great deal of what's going on. Walmart is stopped selling Kindles. I suspect that Walmart pretty much knows that Amazon is coming for them in the broader market with the selling products and getting them the same day off their website. Probably the idea that Walmart and Amazon would be friends, even enough to sell their Kindles, was kind of weird to begin with, but continues to look a little bit like a lot of belief. Maybe keep your enemies closer kind of idea. Madoff victims will receive about $2.5 billion that they finally recovered. I think that's, if I remember right, 50 billion lost. So pennies on the dollar, I guess, is what you'd think. Maybe a tenth of it. But it was going to be kind of interesting. I did talk yesterday about the actual problems with crude trading, and there is a lot of speculation going on today that there's a lot more to what we saw on the actual drop of crude oil in that 5 minutes between 1:50 Eastern Time and 1:55 the other day. But I don't know if anything is actually going to happen, but we'll still have to watch that. But we got that mini flash crash. I'm always expecting the unexpected. Nothing's really significantly changed. The circuit breakers are in, but we've seen that a lot of times that's not enough to actually keep the markets from actually cracking in any significant way. Again, you can give me a call at 877-927-6648. That's 877-927-6648. We'll be glad to talk about your particular stock. Lastly, just before we go, Windows 8 tablet pricing is kind of leaked out. We're looking at Asus's version of the Windows RT. At the end of October, we'll start around $600, which is about $100 more than the Apple tablet. But after they started showing a lot of games, I'm wondering if we're really comparing apples and oranges. I think there may be a lot more to the Windows RT story than has been told so far. We'll be back in just a minute and start getting into some stocks. Give me a call.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Daryl Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Daryl Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act as space is limited. Sign up today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As we get into the stock portion of our show nearly every day, the last half of the hour, we like to look at stocks. Today I wanted to look at pretty much some of these stocks that have been setting up Gartley patterns. Very beautiful MCO pattern from Moody's. And, you know, basically you've got it almost at its target, a few cents light, maybe 20 cents light. And kind of interesting chart out here. It is probably not one of the weaker ones, but interesting nonetheless. Moody's Corporation MCO, if you want to take a look at it. And that is the X point, which starts the whole X ABCD pattern, is April 3rd, and that starts you off at $43.05. You get down to your A point, which is June 25th, at $33.86, and you get to your B at $41.24 on July 30th. We come back down to our C point on August 28th, $38.02, and get up here to what would be a bearish butterfly target at $45.55, just 20 cents shy so far. But certainly the last 3 days of declining volume don't give us a whole lot of belief that we've got a lot going on in there. Another one that's got that pattern is HSBC Holdings. It is just a little under. What I like about this one is the projection comes right into a very long gap that's been around for a while. Let me see if we can bring that up a little bit further up. That gap came down on monstrous volume on 8/4 of 2011 of 7.8 million shares. When we go back and look at this in the Gartley, we've got, what, 1.9 million shares yesterday. I'd love for this thing to get up at 48 bucks. It would be a pretty good signal and complete that Gartley pattern. If you are at home, May 1st starts your X point at $46.13. Your A point comes in at $38.56 on July 1st. You get your B point on July 2nd at $44.95. Your C point on July 24th, $39.38. And of course we have our September 19th high so far. That's going to be close to the D point, but we still need one more up thrust. I'd love for it to get back into that gap down with 25% of the volume. Would be a fairly good indication. We have a lot of stocks making these kinds of patterns out there, so would be interesting. What else do we have here? Silver Endeavor, one of the larger ones and over a longer time frame that has put together a Gartley pattern. We basically hit that point yesterday. Endeavor Silver is EXK for the symbol. We see the X point on it on February 2nd, and that came in at $11.61 down to your A point on May 16th at $7.25, up to the June 6th high, which is your B point at $9.90. Fairly deep retracement back here, which, if you would have tested the low, would have been kind of interesting, but it kind of sets up a test of the $7.25 low, the July 24th low, which was your C point, $7.60. We got up to $10.72, which was 4 cents over the projected Gartley pattern on Endeavor Silver yesterday. We've seen some kind of weakness in gold and silver, and I'm wondering, they're kind of acting a little wimpy up here at these highs. I'm wondering if we wouldn't see the same thing in some commodities like gold, seeing some weakness as we've seen in crude, which is, what, 92.77, 92.75. Quite a significant move. And I'm wondering if the governments wouldn't even get together to actually start pushing that kind of move, maybe selling a little of their holdings to try to push down the actual price of gold, make people think that maybe inflation wasn't the issue. Can they do that forever? No. But I suspect that we've seen the government's hand in the oil cookie jar this week, and I don't suspect that it's too far off to think that they could be in the gold cookie jar, at least for a short term. Remember in, was it 1933 or 35, that they had the act to make it illegal to hold gold. And why was that? So you would know that you were getting, financially raped. The easiest way to discuss that. But anyway, Dick's Sporting Goods, the last Gartley pattern we're going to get here to today. This one went a little bit higher and farther than our projection, but came right back into it today. Not uncommon for these Gartley patterns. We see Dick's Sporting Goods, DKS, and that's May 15th. Start your X point at $51.61. You get into your A point on June 1st, $44.06. decent volume up there. July 5th sets up your B point at $50.32. We get down to July 23rd for our C point at $45.82. And we go up and hit the projection for the D on the Gartley pattern would be $53.71. We went a good 50 cents above that. And pretty much pulled back into that pattern right now, and pretty much right underneath that bearish butterfly target. But these things are like horseshoes and atomic bombs. They get you close, but you still need to look at them. Last significant volumes days were down around 49, and would not be surprised to see this come back in any kind of market pullback back to the $47 price range. Summer's over. Most of the sports are over. A little too early for ski season for Dick's. One of their less impressive seasons. Pretty much everybody's already bought their football wear, and there are no Lululemon. I don't think there's any kind of people doing Pilates all over the Dick's Sporting Goods store. So I think probably one of the weaker segments of their year. Wanted to get into some individual stocks, and we'll do that here. First we were talking a little bit about silver, so I wanted to get back into that. Silver has, at least on the ultra short silver, penetrated its last previous low, and the volume has not been there at all. We saw the last major low on February 29th at $40.60 with 4.2 million shares. We've gotten some volume. We basically tried to go after that with 2.3 million shares on the 13th, and we just really haven't had anything other than a slow sideways move. You'd certainly want this thing to close back above that $40.60 range to confirm. So what are we talking about, a buck here? But that would pretty much put in a fairly significant high, I suspect, in silver. Another one that kind of was very interesting was Waters Corporation, WAT. I think maybe we talked about that Wednesday or Tuesday. This one that's got down very hard on high volume. This thing's kind of pulling right off about where you would think it is on lighter volume. Again, we're probably not going to see the reaction this week. It will probably be into Monday, Tuesday, or Wednesday next week where we actually start seeing a lot of movement in the market. Again, you can give me a call at 877-927-6648, and I would appreciate your call. It's all about you guys, and I like having you call in every once in a while. And what do the small cap bull 3X shares, TNA, another one that we've brought up here over the last few days. Looks like it had tried to make a top. The volume was probably good enough that we're going to probably see one more attempt back up at it, but it was still light, and it has given a sell signal. We're looking at the March 27th high at $66.68, and that is with 12 million shares. We went above that on September 14th with 8.9 million shares. Still seeing kind of a light volume, 3 million shares off that high, but not any kind of volume following and huge sell-off. It generally means you can get maybe a 50% retracement back up, so maybe we'd see $67, something like that, in that stock ETF before we see this thing roll over. But certainly, I don't know if you can all see it, but I do have my power law vector numbers on this, and this is showing some fairly significantly lighter volume in a lot of these ETFs on the moves back down. For my numbers, and basically these are like using decibel numbers, that's all relative, and they were logarithmic, but we had a down move of 12 against a 7.7 move up. If you even add the two together from the first move, it still doesn't get you back up there with any significant movement. And a sad day indeed is when you see Molson Coors company, TAP, T-A-P, coming up to these highs on light volume. The one thing I never understood, maybe someone can call in and tell me, was why it was illegal to take Coors beer, and they had to have a movie like Smokey and the Bandit where someone took a semi and drove it across at a high rate of speed. Couldn't they just put it in an airplane and landed it? No one would have ever checked. Did they really need that much beer? Why is the whole Smokey and the Bandit movie about moving beer from one place to another and Coors being illegal? I don't know. Maybe was it ever illegal? I still don't know. Anyway, I'll wonder about that forever. As we look at Molson Coors TAP, we do see that the last major high with volume was February 16th at $45.99, 3.1 million shares. We did get into that and over it by a good 36 cents on September 14th. We've stayed around these levels, which suggests you're going to have one more try of a push. Normally at this time, especially companies like this, look for a push maybe down into the $45 range tomorrow. I haven't looked at the options, but a lot of these stocks are looking just like that. We may have some small moves tomorrow, some of them up, some of them down, but look for them to push in this kind of flat market, a lot of these stocks back to their expiration points. I'm looking for LinkedIn, another one up on very light volume up here to try to expire tomorrow around the, what is it, about maybe 120 mark. It looks like they're going to try to push it back down in there. Some of these look like they're going to be, but another one where you had high volume down, one more push back up to these highs. Last major high that this is over was the May 4th high at 10 million shares. As we got back into this, the best we could get was 6.7 million shares on the 6th of this month. And, really, that's it. I mean, you really don't have much in the way of a high. You got your 3.2 million shares on the 14th. But still not enough to do anything but move it sideways on a market that continues to be heavily short. I'm wondering, LinkedIn is one of the few social stocks that actually has avoided the bullet, but I'm almost wondering, because have they been pushed to levels that are not sustainable over time. I suspect this would be one of the first ones sold into the end of the quarter. I know a lot of people are in this that are in the fund group, so this one may hang on a little bit longer. But I suspect most of those funds are the end of the quarters are going to be the end of October. So we may get another 45 days out of something like this, even if the market was to fail. Leg & Platt, another company that's hanging around up at these highs on very light volume. When we look at the last major high in LEG, it was October 27th, 4.1 million shares, $24.84. Another 50 cents above it. Seems to be kind of the number. A lot of these things are just kind of turtling and prairie dogging above those previous highs. $25.24 for a high, but on 1.6 million shares, so less than 50%. Looks like we're going to try to close back below that previous high, which would guarantee or actually confirm your sell signal, not guarantee, but confirm your sell signal on Leg & Platt. Of course, Leg & Platt produces engineered components and products worldwide. Furnishing segment offers inner springs, wire forms, steel mechanisms, really bed frames, ornamental beds, adjustable beds. Basically, if it's stamped or it's pressed out of steel, commercial fixtures, a lot of that kind of stuff. They're real big into that. In a global building pullback, they would be fairly open if you think that this is it. Of course, they've come down from $19, or come up from $19.25 in a fairly consistent move from the June 26th low out here in the marketplace. Let's see what we have. Oh, we're just about done here for this segment. Please give me a call at 877-927-6648, 877-927-6648. I appreciate your call. I know it's a quiet day out here, but we'll enjoy that.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, we've got Bob from New York. How are you doing today, Bob? Are you there, Bob?
Me?
There you go.
Hi. I wanted to ask you about Calpine. I sold the $16 October puts, and I'm interested in being long. The stochastics seem to look like they're starting to set up possibly for a buy, and I was wondering what your opinion would be.
Wholesale Power Generation Company owns and operates natural gas-fired and geothermal power plants in North America. I don't know. Why do you think you want to be in this? I'm just curious.
Well, it's natural gas. I'm sort of interested in that and in the energy area. And I was actually looking for some premium, and, that sort of started things off.
Yeah, the problem I see is not a whole lot in this, either up or down. When you say they're in natural gas, they actually use it. So as natural gas goes up, it'll probably actually hurt them. The company sells wholesale power, steam, capacity, renewable energy credits, and ancillary services to utilities. If you want to keep the dividend and everything, that's fine. I don't think that there's a whole lot in this thing moving one way or another. So, to me, you have a high volume down day that's kind of turned the stock sideways. That was on the 7th with 12 million shares on that gap down, which is now going to be resistance back on the way up. But you've got like a $2 trading range here for months. I don't know, it just seems... So is it a trade, or you really want just the dividend off of it?
Well, I was thinking initially really the option premium. I don't think they pay that big of a
dividend.
A dividend.
Yeah, I didn't look to see what it was, but
I'm just looking at Yahoo. It says not available.
Yeah.
I guess I was thinking more about the capturing premium on it, and I guess I was thinking it was more involved in natural gas.
I like to see, I would probably want to be selling premium when the VIX was high. Let's see, what is it today? I didn't look at it, but your implied volatility has got to be extremely low on this thing, which means you're not going to get a lot of money for selling those puts, and the decay is going to be somewhat smaller.
Right.
That's the only thing I'd say is that while you can sell it and make a little bit of money, I'm not much in making a little bit of money. It may be a good trade for you. It's just, I just don't see anything that would, let me put it this way, it wouldn't interest me in that it's, I don't know, I just don't see how it's worth your time and effort. There's probably better fish in the sea for going back and get it. You got a VIX at $14.20. I don't think you're going to be capturing much. At this point, I want to be buying puts and calls, mostly puts, with something down. Anytime you get into 13s or 12s, you're generally buying your puts. It's cheaper than actually owning the stock against any potential move. And a lot of times, maybe it goes a couple of months against you on buying some puts here on various stocks. But I'd much rather be buying stocks on some of these high bloated stocks than trying to sell and capture premium right now. You want to be, I guess, if the premium drastically went up, you'd probably be okay. I don't know. Oh, we're out of time for today. I certainly appreciate the call. I'm just thinking I'd want to be selling selling that on the opposite side. I'd just rather have a put or a call here than actually trying to capture premium by selling an option. Anyway, that's my opinion. I hope you all have a wonderful and safe day. We will see you all tomorrow.